there. And this is on a 1 minute chart. Okay, small little shallow run. We want something that's going to push through it. No fair value got formed anyway. Okay, I just paused it right there. Now look at this initial poke above that high that we've drawn a line on. It went above it. It went down, yes. Did it create any fair value gaps in there? No, every candle overlaps. There's no gaps there. Okay. There's also no swing low taken out. So there's nothing in here yet. Now we have a higher high running above this high and the high we were looking at on the 15-minute time frame, which is denoted by that horizontal line. Right there, now we have the likelihood. If we're watching it live, we're waiting to see, does it break lower? If it breaks lower, where is there a swing low? Right there. So if we can trade down below that swing low, and as soon as it does that, look in the highest high that forms and that low. See if there's a fair value gap that forms. Right there. We went below it after taking out the high. Here's your number 1 candle, the number 2 candle, and the number 3 candle. So there's your gap right in here. So if it trades back to this candle's high plus, I don't know, 1 handle or 1 tick, maybe 2 ticks, whatever you believe is an ideal entry for you. The easiest one is just go 1 tick above that and it removes all the doubt. There's no guesswork there. There it is. And where's your stop loss going to be? Above the high of candle number 2. Or you can use above candle number 1, which creates a swing high. Okay, whichever one you can afford and allows you to put the trade on. Boom, right there. That candle, if you had a limit order right there, that would trip you in going short, and your stop would have to be above here. Another one right there. There's your second entry. Right above this candle here, that's entering. That's your limit order getting in. Go short. Same stop. Third opportunity. Almost completely closes in all that range right there. See that? Right there, if you see that live, it feels like it's going to keep going higher because this candle at one time, when it was at the high, was all green and bold. You need to trust and train yourself to look at this pattern as it's forming, because once you see dozens of it occurring, it changes your perspective. You don't get scared. In fact, it's fascinating to anticipate, okay, it went here, so now it's going to go lower. So at that point, right there at that entry, from this candle's low to this candle's high, where's about 50%? About right here, right? So before we go any further, where do we take our profits? Well, you have a fair value gap right there, right? So if you're selling short up here, you can buy it back below here because you're below 50% of the range that it ranged from high to low. You're at a discount down here. So there's your first target. Remember those equal lows down here I was telling you about? What's below that? Sell stops. So you want to be taking profits here and or here. This is ideal. Okay, let's go back and watch the rest of it. Right there. That's it. These are minute candles. So you're selling short here, or maybe you entered on the first one here. So that's minute 1. So 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, 7, 8, 9, 10, 11 minutes. And you have 10, 20, 30, 40, 50, 60, we'll call it 60, we'll just call it 60. 60 handles in minutes, okay? If you are going to hold it, focusing below these lows down here, okay? Trust the bias. That type of move right there is intended to upset traders and get out. And if they trail their stop loss too short and aggressively, they get knocked out right before the big move comes down and takes out the lows down here. So we're looking at right in here. Well, let's look for 14,680. There it is. Now, is that a lot of time getting short here, weathering some of this? You already took first partial down here. So even with this pulling back, your stop stays here. You use the first partial to kind of like quench that desire to roll your stop. Don't do that. If you do that, you're probably gonna get stopped out because you don't have the understanding or the experience to know where to place a protective stop while it's being trailed. Once it takes this low out down here, and if you want to hold on to a position, then you can roll your stop to here, but not before. Why? Because you've taken out a significant intermediate term low. This low to this high.